The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network.
Hello everyone, welcome back to Let's Talk Money 2020. Boy, a lot has happened over the last week when it comes to the coronavirus and the changes that have gone on as far as the different stimulus packages, the news coverage, just everything is just changing so rapidly. But let's keep our heads up, let's stay positive, let's not get too complacent. If we really are thinking about starting that business, let's plan and start that business. If we've had things that we put off for a long time, let's just go on and get it just done now, because you don't want to get into a situation where you become kind of disconnected, you become kind of lethargic. Let's just go at it for a full blast while we're home and in our homes, and let's plan and strategize and hopefully we can plan for a better future. But I wanted to talk a few minutes about the economic stimulus package and talk about the things that may be available to you, our clients, because a lot has changed over the last week. I'm going to rehash what we went over last week. We talked about the individuals and the benefits of this package when it comes to everyday people, and then we're going to talk about the new changes when it comes to businesses. Today is a very important day because today is the first day of the business side of the rollout. Unfortunately, the individuals, as far as the checks that they were to receive, won't be coming forth until well, if you follow the news, it's they say more like April 15th. Well, when the checks will start to come out, and I've heard as far as 20 weeks after April 15th, in cases where you don't necessarily have a bank account on record with the IRS. Some of those checks looks like will come out a little later. I've heard it's up to 20 weeks. But let's get right into it. Of course, every individual will get $1,200 per individual and $500 per child. And it's going to be based on your 2018 and 2019 tax returns. So if you've got your 2019 tax return in by now, it will be based on that family composition. If you have not filed, you can hurry up and get it in, because as I said before, it may take several weeks before those checks start to roll out. So if you need to get that 2019 tax return in, come see us, or I don't know if you want to come see us, but send in your documents to us, and we can get those processed. We'll get those tax returns processed and get you all filed, and you can get your check. But that won't hold up your check. If they got a 2018 tax return on file, then you would actually get your check as well. All right, so there is a phase out on if you make over $99,000, you won't get anything as far as an individual. $150,000 if you're a joint filer, and there is a phase out if your income exceeds $75,000. The amount is reduced. So keep that in mind. All right, so let's just suppose that you could not qualify in 2020 to get your check because, say, your income was over $99,000 if you're a single person, $150,000 if you're filing jointly. If you exceeded that income threshold, then the next year, 2021, if your income so happens to go down, we hope it doesn't, but if it does go down, you can actually get the actual stimulus check in the following year. And that's one thing that I don't hear people say much, but that's one of the things that's in the provision. I'm going to try to touch on things that may not be talked about in the news, the little nuances of the economic stimulus package. So hopefully we can talk about a few touch points that will really help you out. So one question came up last week, and this is a very important question: is what if you owe taxes? Will you still get your economic stimulus check? And the answer is yes. I had a client last week, and he called the radio stations, he called his congressman, and he was trying to find out that answer. And we actually got the answer last Friday through CNN. They actually called us back and told us that you will get your check if you do owe money, which I think that's a great thing. All right, so let's talk about unemployment for a minute. Under the new bill, and I went over this last week, the unemployment, the federal government is going to step in and give people $600 per individual, in addition to the unemployment they currently receive, up to 4 months. And after the state unemployment runs out, they're going to get an additional 13 weeks of unemployment. Okay. I want to kind of move fast on these because we talked about these last week, and I want to really get to the business benefits because there's many different scenarios you could take on the business side. It's just the individual side is pretty straightforward. So one other thing, this is a change that happened as well that, I got a lot of questions as far as the business loans were concerned. And the major contention is if you don't have wages, then some of the economic stimulus packages, if you're a business, won't apply to you. So if you were, say, for example, you own a hair salon, if you own, I don't know, a industry, a business that really is driven by independent contractors, and there are a few, you got nail salons, you got hair salons, you got just a number of businesses that they traditionally don't really have a lot of employees, wage employees, and they do 1099s. Well, there are provisions for you if you do not have wages. So don't feel like if you don't have W-2 wages that you're going to be left out in the cold. That's not the case. All right. So, okay, here's another individual benefit as well. If you have a 401k, IRS SEP, HELOC, or any other type of retirement plan, you can actually withdraw the money. And actually avoid the penalty right now. So you got until the end of the year to do that. So if you want to withdraw money out of your 401k, not necessarily the best thing to do, but if you need that money, then I would most certainly take the money out. You won't have a penalty on that money, the traditional 10% penalty. You won't have that anymore. So this now is the time to do it if you absolutely must have to do it. So also you can take up to 3 years to actually pay off the taxes on the amount that you actually withdraw. So remember now, and if you would take out your money out of your 401k, if it's a deferred plan, then you're going to have to pay the taxes on the moment that you withdraw. So the new provision allows you to pay the taxes over 3 years as opposed to paying it in the year that you actually take the withdrawal. So you could possibly wait until 3 years to actually pay your taxes on that money. Okay, so here's another benefit real quick. I didn't talk about this last week. This is the Family Medical Leave Act. This is where if you have a person working in the office, you're an employer, and you have a person working in the office or working for you, and that person has to be a caregiver to someone else because they're sick with the coronavirus or they're just sick during this period, then that person can go home and the government will pay 2/3 of that person's salary up to 12 weeks. However, one catches, you have to be on the payroll for 30 days. So if you got a husband and wife business, then this is a perfect case. It works well for this scenario. If you have a husband and wife, you have a business together, and you got children, the wife can be sick, go home, and you don't have to worry about the wages being paid, at least 2/3 of the wages. That's a great benefit to have. Now, so as I said before, now the business benefits are really for independent contractors and self-employed people as well. So let's get into a few of these things. All right, so When it comes to businesses, you're going to have multiple channels that you can actually take advantage of. But the one that I think everybody should take advantage of is the $10,000 grant. There's an economic injury disaster loan, and a part of that loan is if you apply for the loan, they will automatically actually give you a $10,000 grant. Right? So you can do one or two things, or you can do them both. You can apply for the loan, get apply for the grant, get the $10,000 grant, and later apply for the economic injury disaster loan, and that really covers self-employed people, independent contractors. So that's a good avenue for these types. Now, the one that everybody is talking about now is the PPP, the Payroll Protection Program. And that's really based on the amount of wages that you pay out. So I'm going to get into a factor of how you determine how much of a loan you can get. But keep in mind that's based on the amount of salaries, W-2 salaries that you pay out. So if we go back here and we talk a little bit about self-employed people, a lot of times they don't have wages, right? They don't have people that they pay. Or if you have an LLC, you might have an LLC that you don't have wages where you're paying people. So, like for example, in this case, a real estate agent, right? A real estate agent usually is a independent person. They can get the $10,000 grant. They can actually apply for the economic injury disaster loan. So they can do both. So typically you go in. I'm going to give you the website in a few minutes. You go in, you fill out the application. It's a very, very short application. I did it myself actually for the grant. So you go there, you fill that out, you get the grant. If you feel like you want to actually go for more and actually get the loan that's attached to it, you can actually borrow up to $2 million. And the government has made it a little easier to actually get these type of loans. I think they relaxed a little bit on the credit, and there's other factors that would make it easier to get these loans. These type of loans here, the EIDL, have been around for a long time. It's just the government made it a little bit easier for everyday people to actually take advantage of these loans. So I'm going to get into some of the other ones in a few minutes here. As I said before, the EIDL is a $10,000 grant. Here is the website right here. If you go, it's really easy. I was surprised to see how easy it really was. You just go to this website right here, and you just apply for the grant. There are not a lot of probing questions. Sometimes when you go to these programs, they ask you so many different questions that you get exhausted, or you really just quit in the middle of doing the application because they're asking for so many things. I found that this one works. This very simple questions, not long at all to do the application. There is one thing I do want to warn you about when you do take the application. There are some questions that sound kind of I wouldn't say tricky, but the wording is not as clear as it should be. Like for example, they'll ask you for your gross wages, and then they start talking about cost of goods sold. But of course, if you don't have goods to sell, you won't have cost of goods sold. They start asking about nonprofits. They say if you put in your nonprofit information. Well, you got to read those lines carefully because most of them don't apply if you're not a nonprofit. So just don't get too intimidated by those questions. Just read the question carefully, and most of the questions don't even apply to you. The question that does that's going to be relevant to most people is your gross wages. So I mean that's a pretty easy answer to give. You know how much you make, and you put it right there. I don't even think you need our assistance to actually do this application. We'll do the application for you, but I don't think you really need our assistance to really do this. This application is really short and sweet. Okay, so when I talk about the PPP, let me give you some of the benefits of the PPP. All right, you can get loans up to $10 million. I think the loan limit on the on the other loan I was just telling you about, the economic disaster loan, I think the limit is 2 million. But the PPP is a $10 million limit. Like I said before, they're going to take your wages, and they're going to take your average monthly wages, and then they're going to actually multiply that number by 2.5, and that's going to give you the actual amount of the loan that you could possibly get under the PPP. Now, there are certain things that you want to consider. All right. So, what are wages? Now, keep in mind, now this is for a business. This is for an S corp, a C corp, or so forth. So, your wages, your payroll you can include, of course, wages, your independent contractors, commissions that you give people. You can actually include a lot of things into this thing called wages. One thing that I don't believe that you can actually include in the wages are dividends. So if you have a S corp, for example, and part of your salary is say $50,000, $100,000 wages, and you also take dividends from the company, the dividends would not be calculated into the 2.5 calculation that we just talked about. So dividends are excluded from this. But if you got W-2 wages, if you got independent contractors, commissions, you can include that into your total payroll. You take that total payroll that you gave out for the whole year. So we say if we go January 1st, 2019 to December 31st, 2019, you take that payroll, you add your independent contractors, you come up with a number, right? And then you divide that number by 12. That's just going to give you your average monthly payroll. So you take that average amount, that number divided by 12, and you multiply it by 2.5. It's that simple, and that tells you the maximum that you could actually take for this loan. Now, here's the cool thing about this loan, this PPP. This PPP has a component that's really all about loan forgiveness. So here's what you do. Just suppose you get approved for a $100,000 loan. You get the $100,000 loan. So you have 8 weeks to actually pay out payroll costs, rents, interest on debt. If you use your money to pay for those type of things, dollar for dollar, the loan is forgiven. So if I have, just to give you an example, if I have $100,000 of payroll to pay out over the 8-week period, and just say I paid $80,000 in payroll costs, and I paid $10,000 in rent, that's $90,000, and just suppose I paid another $10,000 in interest on loans. Well, on interest on mortgages and so forth. That's $100,000 that you got as a loan. Well, if you can prove that you made those payments over 8 weeks, that's $100,000 of debt forgiveness. So why would they do that? Let me tell you why. There are people right now that are out of work. So if you were to get the money from the government is hoping that you would hire people, you would keep the people on your payroll, and you would actually keep paying your rents. It's really to stimulate the economy. I think it's a really good provision. Now you could take up to 25% of that loan and spend it on other things as well. So you don't have to spend the whole $100,000, but they're going to give you 25. You can take 25%. And spend it on other things and still qualify for the debt forgiveness. Keep in mind, and here's the big kicker, you must have employees for this. I tried to find a way around this, and I could not find a way around this. They're going to ask you for payroll records, so you will need to have employees to actually take advantage of this. All right, so here are some of the other benefits behind this PPP provision. There are 50%. You're gonna be able to take 50% of the payroll taxes, up to $10,000 of each person's wages, and you basically are getting a refund. You won't have to pay for that portion of the employer taxes. That could be a big thing if your payroll is pretty significant. You could take up to $10,000 on each person's wage for this year, and you get a credit. You get a 50% credit against those wages. So that's a great thing. Another benefit for the employer is, and this is to really help the cash flow when it comes to the employers. You can actually take your payroll taxes that are due now. You can extend those payroll taxes out over 2 years. So you can actually you could take 50% of the payroll taxes that are due during the whole 2020, and you can pay those payroll taxes at the end of 2021, and you can take the other 50% and you can pay it at the end of 2022. So this is a thing where the reason why the government would do this is because they're trying to hire more people. You know, if your payroll costs are less, then you have an incentive to really hire more people. So there are a lot of people that will lose jobs over this. There are a lot of businesses that will shut down. But this is one way to actually stimulate the economy by really hiring people and having those people to work throughout this corona epidemic. All right, so here's one other thing. Here's one other option that you can also take. If you're a business that has generated NOLs, or you generate your NOLs this year, you can actually take those net operating losses and you can carry back those net operating losses for 5 years. So basically, you will be getting refunds for taxes that you paid in the past 5 years. So this could be a good thing for, if you've paid taxes in the past, and mainly we see this in corporations. At the corporate tax level, you might have paid taxes over the last 5-10 years or whatever, but you can go back 5 years and actually claim refunds for the taxes that you've already paid up until the point of your NOL, the amount that you actually lost. So this is a good thing. And also there's been some interest deduction changes. So I don't want to spend too much time on the interest deduction changes, but know that these benefits are here. So what we're going to do right now is we're going to take a break, and I'll come back and we'll rehash, and I'll introduce some additional points here. But I think overall the stimulus package is a pretty good package, and this may not be the final package. It might be other packages that come along to actually stimulate the economy even better and to put money into folks' hands. So I wouldn't see this as the end of things. So we're gonna take a quick break, and we'll be back. Hi, I'm Troy Emory. Here at TD Emory & Associates, we offer a wide variety of business tax services for small and large companies, including corporations and partnerships, nonprofits, and real estate taxation. Also, we offer audits, compilations, and reviews.
Let our knowledgeable staff at TD Emory & Associates help you optimize your tax benefits today. Dependable, accurate, trustworthy. TD Emory & Associates. Dependable, accurate, trustworthy. TD Emory & Associates.
What is this? The IRS?
We know that your tax preparation requires more than just the basics.
Hi, I'm Troy Emory, and I've spent my entire professional career helping taxpayers in a variety of tax issues. Let us show you how to confront and solve tax issues with every viable option under the law.
Call the tax team at TD Emory & Associates now.
Okay, we're back. Okay, I'm going to talk about how you really execute some of these loan packages. I talked about the grant, and I told you that's a very easy process. You're going to be very, very surprised how easy it is. And I gave you the website. Actually, the website is there on the screen now for the actual $10,000 grant, and if you wanted to apply for that EIDL loan. But let me get into the mechanics of really how you make this happen. For the PPP, you're gonna have to go through your banks. Now, from the research that I've seen so far, as far as the PPP is concerned, you have to deal with a bank that you already have a relationship with. So let me explain what the relationship means as far as some of the banks that I've seen. I've seen the business relationship be defined as you have deposits at the bank and you have a lending relationship with the bank. Now, what I'm not sure is, do you have to have that lending relationship? Because many of us, we might have an account at a bank and not necessarily a lending relationship. Now, let me explain what lending relationship is. If you have a line of credit, term loan with the bank, or a credit card, okay? So it's kind of easy to really fit into those categories, and hopefully you'll have those type of relationships with the bank, and hopefully they won't be too stringent about if you don't have debt with the bank, but you have deposits at the bank. Will they kind of push you aside and not really take your application serious? I just don't know. It's just too early to determine that. So the thing is now, I've actually seen online where the banks have also said, look, if you don't have an account with us right now, you still have time to open up an account with them, and you can actually try to get these PPP loans. I don't know if I would actually go for that scenario. I would probably feel better if I were to go to a bank that my money is already there and I have a long-term relationship with the bank. But you keep in mind, it's an opportunity for the bank to actually get more deposits as well. So, that's the key thing. You have to have a relationship with the bank. So if you, for example, if I bank at Bank of America, and I'm trying to get this through, say, PNC, I'm not going to have preferential treatment. It sounds like that the banks are giving preferential treatment to those members or those people who deposit already at their banks. So, and I actually have talked to several bankers, and they're basically reiterating the same thing. Okay, so to get the actual loan for the EIDL, I'm talking about the big loan. I'm talking about the big loan here. You follow that online, so there's not a bank process involved. The reason why the banks are doing the PPP is because when the legislators were actually putting together this piece of law, they realized that they didn't have the capacity to really handle these guaranteed government loans. So in these cases, when it comes to the PPP, the bank is handling your application, but the federal government is stepping in and guaranteeing those loans. Now I want to talk just a few minutes about qualifications for these loans. You don't have to do a personal guarantee, right? So and the credit will be relaxed. I think on the PPP, I don't think a credit comes into the calculation, which is good, especially with times like this. But I believe the other loan, the EIDL, you have to have certain minimal credit qualifications. But I don't think I don't think you have to have outstanding credit to actually get the EIDL. So, and if you do, I think the credit requirements have been relaxed. So it's going to make it a lot easier for a lot of other people to actually get these loans. So, okay, so let's talk about the duration of the loans. So with the PPP, you can actually get the loans up to 10 years, and the rates are pretty favorable. I've seen rates from 4%. I don't think the maximum. I'm sorry, the maximum on the rates are 4% on the PPP. Now on the EIDL loan, you're talking about real low rates. I've seen rates in my research is going down as low as 0.25%. I saw another loan at 0.3 something percent. But the point is, these loans are almost interest free when it comes to the EIDL loan. A little bit more as far as the loan on the PPP. However, on the PPP, there is a deferment period on the PPP. You have, I believe it's 48 months to actually pay off the loan, but you don't have to make your first loan payment until month 13. So the first year you could actually not make any payments on the PPP loan. But keep in mind about the debt forgiveness component. Now, if you want the debt to be forgiven, you got to spend that money on either payroll, interest on loans, or rents, right? So that's the key thing with the PPP. The EIDL loan, you don't have to really spend your money on those particular items. But now, of that $10,000 that you got, if you do later get that EIDL loan, then $10,000 of the loan can be forgiven if you make those purchases on the same types of purchases that were for the PPP. So again, it's payroll costs, interest on loans, and rents. Okay, so there is a size requirement. You have to have less than 500 employees. And there might be other types of requirements, but those are the biggest requirements when it comes to who can qualify for the PPP loan. I kind of talked about this earlier before. The maximum amount of the PPP loan is 2.5 times the average monthly payroll, and you can actually do your loans over 10 years. So here's an example. We put this example last year up on the board. So if your average monthly payroll is $20,000, the maximum that you get when you multiply it by 2.5 is going to be $50,000. So the PPP again is based on payroll, right? But if you're looking at a larger loan, then the EIDL is probably a better source if you don't have that large payroll. And again, I'm going to recap the EIDL loans, mainly for independent contractors. A business can apply for the EIDL loan, but I'm just saying this is inclusive of the independent contractors, self-employed people, so people who don't necessarily have payroll. The EIDL loan is where you want to go, and like I did, I put it on the board here. Where will you go to actually find these loans? There are plenty of websites out there that will actually direct you to the right place. So with the PPP loan, the moral of the story is the bigger the payroll, the bigger your loan, right? And the major benefit behind the PPP loan is the fact that you can take 8 weeks and spend your money on the things that I mentioned before, and you can dollar for dollar. You can actually forgive the debt. So the PPP loan has its advantages. The EIDL loan has its advantages depending on who you are and what size loan that you're trying to get. But hopefully these packages will stimulate the economy, and like I said before, there probably will be other loans. Now you can start applying for both of these loans now. The open date for the PPP loan is today, the 3rd of April. However, I have seen on certain websites, bank websites, and I've been to quite a few today, that they're waiting until Monday. They're trying to sort out how all this works, I guess, over the week, taking today and over the weekend and try to figure out how it all works. And then they're allowing people to actually apply on Monday. Now, Bank of America you can actually start applying today, and I think there were a couple of other banks that I saw that you can apply today. The period is, I think it goes up to June, the end of June, when these programs will be available to you. But I would actually do it now. The reason why you want to do it now is because they're going to take at least a few weeks to actually approve or disapprove your application. And then you got to keep in mind they're going to get more and more people as time goes by. So you might want to do this as soon as possible. The grant, I hear that the grant will actually show up in your bank account in 3 days. So you want to go do that $10,000 grant like immediately. I don't. If you got a business, I don't see why you won't do the grant like right away. Just don't even think about it. Just go do it. There are other programs that I hear that are out there. They're also giving monies at the local and state levels. So you might want to look into them. I know. I'm here in Maryland. So Maryland actually has a couple of programs, and I'll get to those in a minute. So again, I think I've already rehashed this. If you don't have employees, the EIDL is for you. And if you do have employees, the PPP, and then also that everybody should really apply for the. When I say everybody, all businesses should really apply for the EIDL grant. Okay, so here are the programs that are available here in Maryland. Some of them, and I've looked at multiple states because there are some good websites out there that would take you state by state, and they would show you some of the benefits in each state. And I just live in Maryland, so I'm really focused on the Maryland one. There's a $10,000 grant here in Maryland. I think that's subsidized by the federal government as well. And then you can get loans up to $50,000. The thing is, about this Maryland grant, and I don't know about every state in the union here, but the thing is about this $50,000 loan is based on the payroll. So there's a payroll-driven factor here on that loan. So this may not be the place for a person that does not have employees, unfortunately, unless things change. I mean, things changed a lot in the last week. Things might change in your local jurisdiction, where they might say that, hey, look, you have to have employees for this loan. I mean, for the loan or the grant. If you check back the following week, things may change because they're going to find that a lot of people are. They don't have necessarily W-2 wages, and they make these changes on the fly. So, hey, next week we might be talking about something totally different when it comes to the state and local governments. We hope so. So what I'm going to do is I'm going to keep you posted as usual on the different changes, the different things that you can do. But I just want to rehash, as I said in the beginning, let's not be complacent. Let's not think that the world is coming to an end. This will actually pass at some point. And the thing is, you're going to have to stay positive, and then work as hard as you can. Even if you're not working right now, work on something. Work on that new business plan. Work on something that you've been putting off for the longest time. But while you're home, be safe, exercise. But the key thing is you got to keep your mind going. Stay focused. I haven't really slept much during this whole coronavirus scare because I'm up working the middle of the night, early in the morning, late at night. I'm just working. I just believe that times like this present great opportunity. When things are looking like it's going to be just doom, I just think that there's plenty of opportunities to those who really keep their eyes open and look for those opportunities. And there are plenty of opportunities here. So this will pass until we see each other again. Stay safe. Take care.
Welcome to WBGR Network, where we are doing some amazing things in the internet media broadcast arena. We would love for you to come visit our state-of-the-art studios and be a part of what we are providing to the world. Contact us today. WBGR Network, where you go, we follow. Call us at 301-429-9247.